Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today I'm going to talk about some missed, misused, and misunderstood tax deductions. We're going to focus on above-the-line deductions. These are found on the bottom half of the first page of your 1040 and include moving expenses, self-employed, health insurance, alimony paid, and student loan interest. For your moving expenses to be deductible, the move needs to be related to a change in your job. There's a distance test that essentially says you have to have moved more than 50 miles away from your prior job. And there's a time test that says you have to stay in the new place a certain number of weeks. And you can only deduct your costs that exceed whatever your reimbursement is from your new employer. The expenses you can deduct are your storage and moving costs for your stuff, like U-Haul, for example, and your travel expenses to move you and your family. And that would include lodging costs, it would include a plane ticket. You can even deduct your personal vehicle expenses, either taking a standard mileage rate or you're out of pocket, but you can't deduct meals. If you're self-employed, you can deduct the premiums you pay for health insurance on a policy that covers yourself, your spouse, and your kids up to age 27, regardless of whether it's written up in the name of the business. You get a bigger bang for your buck by deducting it this way than as an itemized deduction on your Schedule A, and you can include your long-term care insurance and Medicare premiums, which is nice, but you are limited to the net profit from the business adjusted for certain items. To qualify as alimony paid, the payment must be in cash or check to your ex-spouse or to a third party on their behalf. It has to be required under a written divorce or separate maintenance decree, and your ex-spouse can't live with you or file a joint return with you. Non-cash payments or property transfers, such as the transfer of ownership of a house or a car or a piece of property, are excluded from income or are treated as gifts and are not alimony. If you're required to pay both child support and alimony, any payments you make are treated first as child support, which is not deductible. And if you jointly own a piece of property and you make payments to maintain that property, those payments are not considered alimony either. If you make a payment on a student loan debt, you can deduct the interest on that payment up to $2,500 per year if you meet certain requirements. You have to be legally obligated to make the payment, so your name has to be on the note. If you're married, you can't file separately from your spouse. You can't be a dependent on someone else's return. And your income has to be under $80,000 or $160,000 if you're married. If the student is the dependent on your tax return, then you can deduct the interest even if the student is the one who pays it. But if the student is not your dependent, then they're going to take the deduction even if you pay it for them. If you have questions about the deductions covered in this video or any other tax or accounting questions, call the experts at AA Accounting. Call us today to schedule an appointment to discuss your tax situation. We can help.